Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome and welcome back to our regular community. My goal is to assist you to be more of a financial blessing to yourself and those you love, and also gain real wealth in the process. Let's run the numbers. Bitcoin $47,020, down 2.46%. Ethereum $32.91, down 4.07%. I've hidden knowledge gems throughout this video. Unless you watch to the end, you'll miss them. See how many you can find. Something helpful, we always start the program and end with this heat map. What is it actually telling us? We can see these really red areas, for example, MATIC, Theta, Uni, Link, FTT, Aave, AXS. That means money is flowing out of those cryptos. FTM, OMG, CRV, SHIB, money is flowing into those cryptos. It's really good to also keep your eye on the stable coins, USDC, DAI, USDT, and BUSD. When these go green, it means money is flowing from the crypto market into stable coins. We can see they're all red currently. So even though the market is quite red, it's actually redistributing between different coins. It's not actually a flight to safety. We can see also Sol, DOT, ADA, ICP, VET, Luna Algo, EOS, and a number of others are quite red. Yet there are others that are green, such as NEAR, Cello, Atom, and Avax just went red. What it's showing us is that money is flowing out of the majors into the miners. Every episode I put this together for you because it allows you to see the market and how it's moving. It's very, very valuable. You can look back to any particular day and understand what the market was doing. Our community focuses on real wealth. Real wealth is much more than just money. Money is of course, incredibly important, but without real wealth, such as inner and outer peace, kindness, authenticity, courage, purpose, meaning and fulfillment, having all the money in the world just won't make anyone happy. I'd like to talk to you today about the concept you deserve to be. It's a really, really important concept and idea that you can carry for the rest of your life. You deserve to be loved. You deserve to be heard, to be seen, to be respected, to be happy, and to be wealthy. And you deserve so many more things than that. It's really important that you understand and believe that you deserve to have the best things in life, because you do. What you believe you deserve, you receive. You just absolutely deserve to be loved. You absolutely deserve to be heard and seen and respected and happy and wealthy. But do you believe that you should be these things? I ask that question because what you believe you deserve, you receive. This is a very, very important law of life. Rule 373, believe you deserve success. Believe you deserve all the best things in life, because you do. In the past, people may have told you that you don't deserve happiness or wealth, or maybe you convinced yourself that you don't deserve these things. You absolutely do. You're hearing this message because things have aligned in your life that you're ready for this. And it could be that you believe that you are so deserving of so many things, but some other things you don't feel you're deserving of. You deserve everything in life, all the best things in life. That's what our community is about, real wealth and financial wealth. Looking at KS zone analysis, the 4 stages that all investors and traders progress through to become consistently profitable and attain real wealth, to get around from zone 1, the fear zone, through zone 2, the blame zone, through zone 3, the patience and rule zone, and to zone 4, the meaning zone. This is all built on the belief that you deserve the best. If you don't believe you deserve the best, you will get caught at lower levels. You don't want to be there. You want to aim for zone 3 and zone 4. The really nice thing about this particular analysis, you can enter zone 4 at any time. You don't need to progress through 1, 2, and 3, but to become probabilistically fearless, you need to have progressed through zone 1 and zone 2 to get to zone 3. The key is feeling deserving and the belief that you deserve. It's really, really important. I can't stress it enough how important this is. If you don't believe you deserve something, you will self-sabotage. You will prove your subconscious correct. For example, if you have a feeling that you do not deserve wealth, you do not deserve these better things in life that you absolutely do deserve, what will happen is that you will take actions that will keep you in zone 2 or zone 1. Getting to zone 3 requires belief, and belief that you are worthy and you are deserving, because you are. Rule 138, all investors become traders whenever they buy or sell. This is a particularly important rule today. Investors typically get called into a market through advertising of higher prices. They see that prices are going up, or at least the perspective of higher prices. When prices come down, they expect that the price is going to go all the way to zero. So what typically happens, investors tend to buy around the top and sell at the bottom. If you've ever said jokingly, I buy at the top and sell at the bottom, you'll know exactly kind of what this feeling is like. Traders have a very, very different mindset. Traders go opposite to investors. They seek to buy lower and to sell higher, but they do so in a very, very specific way. This site is from btctools.io. It's a live Bitcoin and crypto fear and greed index. What you'll notice is there's some red areas here. That is extreme fear. These are the points at which traders buy, and these are the points at which investors sell. This is really important to understand too. Up here, when there's a lot of optimism inside the market, this is where investors typically buy because they think it's safe. They think it's certain the price will go up. The markets penalize certainty. What happens down here? The markets are bottoming. That's where traders come in and purchase and go long. When things get too overheated, that's where traders start to dilute their position, start to sell out. If you have a trading mindset as an investor, you will do 10 times better than you would otherwise. It's literally a license to print money if you can think like a trader. There's no necessity that you become a trader. The only necessity is you can think like one and slurp up lower prices in these areas of high fear. Let's have a look at investment substitutability. We can see the S&P 500 proxy for stocks is up 34% for the past year. Gold is literally getting hammered. Poor old gold. Gold needs a hug. It's down 11%. Bitcoin is up 329% for the past 12 months. What could actually be happening here is a very funny thing that Rect in our community pointed out. We may have a golden cross happening here. Gold is crossing across to Bitcoin. Money from gold may be translating itself into Bitcoin, which is regarded as digital gold. There are, of course, other issues occurring with gold, such as the increase in the dollar, but it's really important to note that Bitcoin is becoming a view of digital gold. Why is this the case? Fidelity Investments put out this analysis recently. They're predicting $1 million per Bitcoin. Bitcoin is currently around $47,000. $1 million per Bitcoin, after 2026, and after 2030, potentially $10 million. That is because Bitcoin is the next major upgrade to the internet of value. What you can see here in this article, I've provided a link in the description. This is the KS model predicting Bitcoin at 486,000 by May 25th, 2022. I go through and explain the difference between retail psychology and institutional psychology, and a lot of other things about the KS model, how it works. This is just one particular thing that I draw around each day to try and help people understand what Bitcoin is all about. So we have a technological adoption curve where the internet grew very quickly, but crypto is growing far, far more quickly. It's going to literally change the world. You could think about it this way. Having Bitcoin and having crypto is equivalent to owning all the internet companies that ever existed at the start of the internet. Wow. Analysis from Crypto.com saw an average of 19.2 million users joining the crypto space over the past 6 months. It's becoming a very, very hotly contested market. People are loving crypto because of the percentage gains. But even so, less than 1% of the population has an active Bitcoin address, and less than 3% of the global population holds Bitcoin. There's a long way to go before we reach saturation. We're literally right at the start. So when we see returns like this in Bitcoin, we can consider that these returns will continue for quite a few years. Turning to the KS model, a crypto technical trading model based on institutional price psychology, we can see we're in the bull market sunshine segment of the current run. The current run is expected to go further. Now, some commentators on YouTube are expecting the bull market to come to an end. This is erroneous. Now, I'll just explain why. In the 2012 halving cycle, it lasted 367 days. That's this blue dot. If we push the blue dot up to here, we can see the peak that occurred previously. Pushing it to the next cycle, to the 2016 cycle, people expected that the 2016 cycle would finish in the same duration, 367 days, as the previous cycle. Now what people are assuming is that the current cycle will finish in exactly the same number of days as the 2016 cycle, which is this green dot here. That's why so many people in crypto are calling for the top of the bull market. What they don't actually factor in is there is an increasing amount of time between bull market tops. The market is changing dynamically in accordance with the adoption in the main market. When we have 19.2 million new people entering the crypto space every month, we have governments buying crypto, and we have so many other things. Of course, the cycles are going to be different, but yet many people assume it will be just the same. This is incorrect mathematically. In fact, just to give you an understanding, the 2016 cycle was 526 days, which was 43% longer than the 2012 cycle, this cycle here. That's literally 160 days more. We expect the current cycle will be longer than the 2016 cycle as well. This is helpful to understand because when people, and there are some influencers suggesting that everything is going to pack up, they're just not factoring in the underlying causes of this movement out and how everything relates together. It's also very important to compare psychological sunshine, which is pretty much optimism, to psychological sunshine in the past segments of the run. When the rocket comes up here in terms of price and hits the moon, The moon says, get out of here, rocket, and prices of crypto plummet back to earth. They can decrease 85%. This is really important to understand, not to compare the sunlight of the bull market to the darkness of the bear market. Even though we have these substantial decreases, because crypto is increasing exponentially, it's getting higher and higher and higher all the time. You can think, literally, Bitcoin started at pretty much zero value. It's now $47,000. Now, why am I spending so much time on this? Because many people in the crypto market are calling for a breakage of all the models. That is simply, I don't believe the probability exists for that. Back in 2014, this model was created. That's quite a few years ago, when Bitcoin was selling around the $500 mark. They were predicting $100,000 in 2021. The current price around $48,000. How could they predict that $500 would grow to $48,000, $47,000? How could they possibly predict that based on this data? They could, because Bitcoin is a mathematically programmable asset, a digital asset class. It is literally mathematical money. Zooming into the current price action on the KS model, we can see we overcame this resistance. This is a very, very important thing to understand. If we had have come up, hit this resistance and gone backwards again, that could have signified the top of crypto. That didn't happen. In fact, what happened was that we broke out, retested, and resumed. Now we've hammered in a temporary top here, not a top of the bull market, just a temporary peak. We're coming back, we're consolidating, but we're consolidating in an upwards direction. When we get over $53,000, the real explosive price action will begin. The other thing to bear in mind when we look at Bitcoin's technical analysis, we just had the Quadruple Witching event on Friday in the US market, and we've had the weekend action. Weekend action can tend to follow Friday's close. So if Friday closes down, potentially the weekend action will close down as well. We've seen quite good positive movement here. We have a level of resistance that we need to get above, but we've also got a level of support. Just drilling in, I might zoom in a little bit to help you out. Bitcoin is currently trading at 47,168. It has support below at 46,566, 45,830, 45,268, and the key psychological level of $45,000. What Bitcoin needs to do, it's got some overhead resistance here, playing at around the $50,000 mark. When it gets above 52,000, the fireworks will begin. What typically happens in markets, when you have substantial resistance above, it's common for price to need to consolidate to be able to spring up and through that resistance. It's not an easy thing to get through resistance. It's hard work for price. This downwards consolidation action, and you can see price is basically where it was at the end of Friday anyway. Across the weekend, there's always volatility. This is neither here nor there. What is actually happening on a technical level is price is gearing up to get through this $50,000 resistance level. It's pretty useful to remember there's a lot of fear in the market at the moment. That's, of course, the best time to buy, and that's what we do as a community. There is some fear around Tether as a stablecoin. Towards the end of July, Bloomberg brought out an article saying Tether would be investigated by the Department of Justice to examine the reserves of Tether. Now that story has been circulating and has come up again, and it causes some people a degree of concern. If Tether cannot meet its capital adequacy requirements, we will see a big amount of money enter the open interest on the futures, we will also see tens of billions of dollars of open interest on the traditional futures. We don't see anything like that at the moment. We look at this every day since the end of July. We always seek to be ahead of the curve. There are no problems with Tether at the moment. Total crypto market cap is currently $2.119 trillion. Crypto market cap has this overhead resistance, and when total crypto market cap, which is about 12,000 cryptos, gets above 2.4 trillion, the fireworks are going to start. It's just really literally like Bitcoin, trying to gather momentum to get through this resistance. As we're seeing red in the crypto market, we need to understand, is there some structural issue at play? When we look at the Bitcoin stablecoin supply ratio SSR oscillator, this blue line, what we're actually looking for is the blue line to go up. That means that money is flowing into the into Bitcoin, and of course into the crypto market. We can see when the blue line goes up, the price of Bitcoin goes up. When it comes down, the price of Bitcoin comes down. There was a degree of divergence here. We need to keep our eye on divergence. But at the moment, we see upward pressure. Money is flowing into Bitcoin. Total open interest in the futures market across all exchanges is another key piece of evidence that we check to see how the crypto market is going. We notice price here, the white line, has a very close association with total open interest. The last recorded futures total open interest was around 15.49 billion. What is it right now? It's 15.92 billion, which means more funds flowing in. That should exert upward pressure on prices. Turning to liquidations, across the past 24 hours, there's been about 221 million of liquidations across 59,701 trading positions. Over the past 12 hours, 82% of liquidations have been long, but we see there's not much volume happening here inside the market, and that would be expected. It's the weekend. Let's have a look at Ethereum's technical analysis. Ethereum currently trading at 33.27. What do we notice from this chart? This is really, really important. We know that Bitcoin is under resistance. It's got a lot of overhead resistance above it. We know the total crypto market does as well. We can see the resistance above Ethereum is closer. That's why it is actually seeking to consolidate to get through this resistance. Going down to go up is what crypto is really about. We can see here a key level of resistance for ETH is 36.49. When price gets above 36.49, it's going to rocket. The other thing that we notice, a key resistance, a key structural resistance, will come into play around the 35.15 mark. That is also really, really important. When we start to get above 35.15, just keep that figure in mind. It's quite critical. 35.15 is the point of technical repair. It's a very, very powerful point. We would expect some degree of wobbling to get above 36.49. At the moment, we're just seeking to average or lower the average buy-in price. Let's have a quick look at Bitcoin and Ethereum options. For Bitcoin, options expiring at the end of the month, we see the max pain price, 44,000. This is a price at which most options expire worthless. They cause maximum pain to option holders. Total open interest, 64,361.1, and the put-call ratio, 0.55. Turning to Ethereum options, for options expiring at the end of the month, we can see total open interest, 452,042, max pain price 28.80, and the put call ratio 0.69. Let's venture across to CoinMarketCap. You can see those 12,000 cryptos up there. Let's have a look at the top 7. Bitcoin, Ethereum, Cardano, Binance Coin, Tether, XRP, Solana, and Polkadot. Let's check out the greatest gainers over the past 24 hours. Audio, Cello, NIA, OMG, Atom, FTM, CRV, and SHIB. What about across the past 7 days? The greatest gainers: Audio, CRV, Atom, Cello, Avax, SHIB, SNX, Synthetics, and NIA. Let's go the other way. Greatest losses over the past 24 hours: EOS, Solana, Elron, Rune, HBAR, IOTA, Icon, and Telcoin. Let's have a look the other way. Greatest 7-day % losses: 1. FTT, Arweave, Algo, MDEX, Luna, Elron, and Waves. Quite a few people reached out to me and wanted me to look at Icon and Tel and some of the other community coins. We'll do that later on. Turning to Binance Derivatives, 24-hour trading volume 47.5 billion and around 10 billion in 24-hour open interest. What we're doing here is seeing what the price pressure is from the futures side, from the contract side. We can see the change in the price of the contract of the derivative, negative 2.2%. We compare that to Ethereum, negative 3.3%. We say Ethereum is under more negative price pressure than Bitcoin is because it has a larger negative percent. We then go down, have a look at the other perpetuals. We can see top ranking above 10%. There's really not much. Just Audio, NIA, and OMG. Let's flip the other way and see negative 10%. EOS, Cody, Seller, TLM, and DYDX. Just to let you know, we're going to go through the enhanced pattern recognition later on. I just want to cover the main markets. I think it's really quite important you have an understanding of those. In the last session, we saw Brazil, US, Canada, Mexico under negative price pressure. We can see China was slightly green. We can see Finland a little bit red, as was Sweden, and Norway rocking and rolling. We can see a degree of red across the world. That's why I want to point out what's happening. For the US market, the only positive was healthcare. The negatives, materials, utilities, and information technology. Just very much like the Peter Lynch quote, deal with problems when they occur, not before. Peter Lynch said that more money has been lost by people preparing for crashes or corrections than has ever been lost in the correction itself. It's really important not to get ahead of problems. Just whenever the problem emerges, just deal with it then. The major issue in the US markets was the Quadruple Witching. The Quadruple Witching happens on the 3rd Friday of March, June, September, and December. We have a lot of things expiring in the derivatives market. What typically happens, you get an upward spike in volatility. This is the VIX index, the fear gauge of the US market. Now, why are we looking at the US market? Basically, the US market, for every $100 put into stock markets globally, around $56 goes into the US market. It's really, really important. We can see that on the Quadruple Witching, volatility tends to increase and then subside. We've seen volatility increasing. We need to watch what happens in the next trading session, but this is pretty much the way that the VIX works. It spikes and dies, spikes and dies, spikes and dies. It's just what the VIX does. A little gem for you. What I do in this chart, I inverse the VIX because the inverse VIX is showing the fear in the market, but in the side, the directional bias. So when the inverse VIX spikes down, it means fear is spiking up. Fear pushes the market down. Optimism pushes the market back up. You can see it playing out all the time. I've overlaid Bitcoin here as well, so you can see the relationship between the main markets and also Bitcoin, because that's what we're all about in crypto. This is a crypto-centric station, but we're all about understanding how markets interplay with each other. We can see the Russell 2000 starting to turn around. This is quite important. This is why your pattern recognition is absolutely critical. When you have really, really good pattern recognition, you can just look at a chart and understand it. We can see that the increased fear caused the Nasdaq, the S&P 500, and the Dow Jones to sell down. However, the Russell 2000 didn't do that. That's quite an interesting thing. The Russell 2000 is quite sensitive. The fact that it didn't sell off dramatically, as we've seen in the past. You can see this white line typically gets hit first and then recovers first. It's just a really interesting thing to keep your eye on comparative movement. Another thing to keep in mind, the stock market is actually smaller than the bond market. Many people don't invest in bonds, so therefore don't really consider the size, the massive size of the bond market. This was back at the end of 2020. I'm just giving you a relative sizing. When there are problems, money flows from the stock market and crypto into the bond market. That's really important to understand. When there's a lot of fear, it crosses into the bond market. When there's optimism, the money comes out of the bond market and goes into crypto and stocks. Can you imagine, as crypto becomes more and more mainstream, 10% of that stock value, around 10 trillion, which is pretty much the market capitalization of gold, coming into crypto, and 12.8 trillion of bonds, 10% coming into crypto. You can see just how far crypto can grow. A lot of commentators, a lot of influencers are just not factoring in these things. I guess it's because my background is in finance and statistics. Another thing to bear in mind, when the bonds start to spike up, go exponential, bond yields will collapse because there's an inverse relationship between yields and bond prices. You can see here the Nasdaq. The Nasdaq continued to go up as bond prices were going exponential. That's a warning sign that we must keep our eye on. If that happens, we know it's probably time to take a little bit of risk off. We've got various commentators calling for a crash. Actually, they always call for a crash. It's nothing new. There are whole channels on the internet, on YouTube, devoted to the upcoming crash. And they've been predicting crashes for the entirety of their stay on YouTube, for example. They will, of course, be eventually right, but the problem is it doesn't help anyone because the crashes are, to a degree, you can see them starting to brew. After so many years in the markets, I can see the warning signs, and I will tell you, this is one particular one. There are so many. When we see yields, bond yields falling off a cliff and bond prices exponentially increasing, we know that we need to be careful. So what happens when the markets crash here? For example, the Nasdaq crashes, Bitcoin and crypto will crash twice as hard. It is really important that we have an early warning system, which is why I created this, to look after you. So now looking at Treasury bonds, which are bonds, we can see that bonds did spike up. Now they've collapsed below that resistance. That is a good sign. If bond prices were going exponentially up, we would need to worry. This is one of the things that you always want to keep in mind. A lot of people, a lot of influencers will call for crashes but from a gut feeling perspective, we notice from a actuarial mathematical perspective that there are definite drivers of crashes. They don't just happen all at once. We're not seeing any weakness in bonds at the moment. That's really critical. But what about the rest of the market? Looking at T-bond futures, we can see that the futures for bonds are under this resistance. That resistance is a critical one. We're dealing with a level of support in here at the moment. We do have to be careful. We can also see an upwards level of support playing in here. So to say that everything is fine is not quite correct. We really need to make sure that bond prices don't get past this level of resistance. If they do, we'll deal with it then and we'll see what happens. But the issue is we cannot be complacent. There is quite a bit of turbulence in the main markets at the moment, and there always is. They say a bull market climbs a wall of worry. Just keep this in mind. Looking at Bitcoin and comparing it to bond yields, we can see the bond yields came down and now going up. The more they go up, the better. We can see we're getting recovery in yields, but we really do need to keep our eye on it. A lot of commentators will say that there's an inverse relationship between the DXY, the US dollar currency index, shown here in green, and Bitcoin. What do you see when you look at this from your own eyes? Is the DXY coming up? Is Bitcoin coming up? Absolutely. The thing to understand, people make really simplistic observations and say, oh, the DXY and Bitcoin always move opposite to each other. Well, we can see that's simply not the case. That's why we always look at the price data. We pay very little attention to the news because the news is pretty much misleading. Only because it's sensationalistic and it's just trying to pull eyeballs, pull people to advertisers. We prefer to look at the actual numbers, the statistics, to understand what is going on. Let's compare Bitcoin to the precious metals and the inverted DXY. What we can see here, the inverted DXY is a gravitational pull on the metals, just like Bitcoin affects the alts. What we're seeing is as the inverse DXY plummeted, gold and silver and pretty much everything else was coming down with it. One thing that I see here, a very important thing, palladium and platinum have been equalizing out for the past quite a few days. Just keep that in mind. It may represent a bit of a turnaround, potential bottom in silver and gold. We can see copper also slowed down. For the gold traders out there, gold is actually coming up to a level of support, playing around the 1747 mark currently. Let's just see how gold goes. Gold does tend to do these big sell-offs and then recover, sell off and recover. It's realistically seeking to get above this resistance. Comparing Bitcoin to inflation expectations, 5-year forward and 10-year break-even inflation rate, we can see the inflation rates are starting to decrease slightly. Comparing Bitcoin to the transport indexes and airlines, we can see the airline index is starting to recover. That's a good sign. We're also seeing weakness in the NASDAQ North American Transportation Index, the Dow Jones Transportation Average, and the iShares US Transportation ETF. The NASDAQ Transportation Index is starting to recover, starting to bottom out. Having a look at Bitcoin, comparing it to Brent oil and crude oil, Brent and crude oil continue to improve in price. When there's a collapse, when there's a problem, crude oil and Brent oil tend to drop off a cliff. We're certainly not seeing that at the moment. Okay, we've done a lot of pattern recognition work. Now let's get into the crypto side of that. Let's have a look at the top 33 Binance cryptos ranked over the past 14 days. We can see here Atom is out in front. That's the gold line here. You can see Algo coming down. What about Avax? Avax was coming up and then looks to have broken support. XTZ, what's happening here? Coming down, starting to turn around. That could be interesting. Sol, this green line, what is happening there? It was coming down for a time, now starting to get over this resistance. Maybe I'll just show you a little bit about what I see. For example, top here, resistance here, resistance. Bit hard to see because there's so many lines here, but you can see it's broken through that resistance, now starting to move off. It's starting to repair technical damage. I always love showing you what I see in a particular chart. A lot of people in the community have said it really helps them out. I love helping out. So let's have a look at Atom. What is Atom doing? If we go from this low, for example, around here to this low and draw it forward, what we're seeing is upward support. We may get Atom just coming down a bit to meet that support line, and that's what we're after. We're after lowering the average buy-in price. That's looking pretty good. Okay, what else do we notice here? We could draw a line from this peak in Algo to this peak and just see where it plays out. We can see Algo is under resistance at the moment. These are all really good ways of you looking at a pattern and trying to figure out what it is doing. Why don't we look at Avax? Avax is the white line here. Let's draw, for example, from this low to this point upwards. What do we see here? That we've had a slight break in that support. We've had a lot of positive air here in Avax. It's a very strong crypto, and we always have to be aware when things start to weaken, they can continue to weaken. We've seen that, for example, with Algo up the top here. It was doing really well. It crossed above. Then there was a cross here. Maybe I'll just draw it in so it's easier to see. So this blue line, for example, we'll take that peak and we'll draw it to this edge, maybe to this edge, and we'll push that through. Okay, always fun with this mouse. Now, it actually broke its support line, but that is a very steep support. So now creating a resistance from that peak to that peak. I'm deliberately keeping things I'm not moving things around because I love it when you can just get your eyes so highly trained. We saw this excess, this breaking of the resistance, turning it to support, coming back to it. This is why I always say it's very rare to miss out on anything in crypto. Crypto is inherently volatile. Now, what's happening here? From the low to the low there, pushing it forward, what do we see? A break. Now the price is now consolidating on this side, but there are really good signals that cryptos tend to give out when they're reversing course, or indeed they're first starting to take off. Pattern recognition is the key for you. Turning towards the top 8, we can see the falling knives are starting to fall. And what do we know about falling knives? Going back to the Fear and Greed Index, when the knives fall, that's the single best buying opportunity that you can ever get. Unfortunately, it's common for people to have all their money invested already, and then the falling knife, you just have to sit through it. Sometimes you don't get a chance to buy it, and if you're not getting a chance, it's completely understandable. But if you do, just keep it in mind. They are the profitable times to buy. Okay, returning to the top 8, we can see Bitcoin is currently under resistance. It was breaking out, but unfortunately that failed, and it failed in quite a large way. Do you notice that when this particular support level was broken, this is on the 2 hour, when that support level was broken, it came down and met this level of support. It's always good to know how a particular chart can actually play out in practice. With Ethereum, let's just extend what we did yesterday forward. We can see we had a breakout, and when Bitcoin broke that support, the whole crypto market came down with it. But we're seeing that Ethereum has a level of support coming into play right now. But all cryptos get their power from Bitcoin. This is really, really important to understand. We can see from these charts there's a lot of fear in the market. Unfortunately, BitBoy Crypto, who has quite a few subscribers, pointed out in his eyes that the crypto market would come to an end. I think it's caused a degree of panic. I think Ben got on the wrong side of the market and didn't see what was unfurling, and he got pretty burnt by that. It's quite possible he's just trying to do the best by his community. However, panic is never a good thing. When we consider what the technicals look like, and that's why we go through the KS model, that's why we go through past cycles. We go through everything so we don't just make a thumb in the air call like, oh, which way is the wind blowing today? Oh, I think it's down. Oh, I think it's up. I think it's down. It's sideways. I don't know where it's going. Those kind of predictions I see happening all the time on many, many influencer stations. We just go from the numbers. We run the numbers. That's what we do as a community. These days like this are unprecedented buying opportunities. And of course, it's always important to have a little bit of dry powder to be able to buy these. If you're interested in dollar cost averaging or DCAing into any particular crypto, these next couple of days are the key. What we really understand, as we've looked at Bitcoin, total market cap, and Ethereum, the dominant ones, we can see that the market is heading into a level of resistance. It needs to be overcome, and that overcoming is not easy. I mentioned many times before that I believed a level of capitulation would occur. Why do I think that? Because when capitulation occurs, it draws shorts into the market. People become certain, oh, it's going to go down, it's going to crash, fantastic, I'm going to make so much money, and they short the market. They're expecting the price to fall. When they do that, the institutions step in and say, no, there is no such thing as certainty in any financial market, and then they come in and liquidate those shorts. The shorts need to buy to close their positions. They buy at market. When they buy at market, it causes price to explode exponentially upwards. That's the nature of crypto. Well, it's the nature of all markets, but especially crypto. Another few community members reached out and asked me if I could cover AMP, Veracity, Multiback, Icon, MATIC, and these particular ones. I'm always happy to do whatever I can to help the community out. We can see VRA. VRA is consolidating quite well. What I notice when I look at this chart is that there is a degree of support playing in through here. That's very good. For example, VeChain, VET, was doing quite well, was getting above this once resistance, turning it to support, but it had a downward momentum, showing a lot of weakness. It's not to be, it was quite expected that it would decay like this. When we look at things coming down, unless they can actually rebound like VRA, like this, and show upward support, Multiback is also showing good upward support. Phantom, we can see the same good upward support. Icon is just pulling back. We can see a clear channel here. And what we want to actually see with all of these cryptos is them pretty much honoring their support lines. Let's just have a quick look at Icon. If we draw a very tight line through here, we can see Icon is on the other side of that support. But we've been following Icon for quite a while, so these lines going back also play in. If we just extend that one out, we could see that Icon can get support around the $1.57 mark. It's always good to add to winning positions as well. If we draw a line on Phantom to this lower and just draw it upwards, we can see quite a nice support line happening here. And with MATIC as well, what do we see here? We see strong support in here, in this zone, playing out. Price is just slightly below it, but that is only slightly below it. That means we have to keep an eye on it. But if you're a MATIC fanatic, it's a rhyme. If you really love MATIC and you want to get in, getting in at lower prices is a great idea. The next real level of support is around 1,238. Just keep that one in mind. It's currently at 1,291. Out of all of these, which one do you think has the most potential? Having a look at AMP as well. AMP is very spiky by nature. These kind of spikes can basically cause a little bit of problem if you're not prepared for the volatility. For example, you may be here having bought AMP and saying, oh, well, this is fantastic, it's going to go up, but then it spikes up and then it spikes down. We're looking at about a 57% increase in AMP and then a collapse, and it actually collapsed down. Whoops, can't quite see this. Maybe we'll just go full screen. It spiked down to around 11% below that particular line. This is something to bear in mind when it comes to spiky cryptos. They are out there. If you're playing the spikes, you can do incredibly well. If you're not playing the spikes and holding long term, just keep your eye on key support levels. For example, there was a key support level around 0.05, 028691. Now we're just below that. So when price tends to repair itself, that could be a good time to get in. But of course, if you're absolutely in love with AMP and you've done all your due diligence and you know that the volume integrity is there, the founder integrity is there, the network effects are good, the ecosystem plugins are fantastic, all of those kind of things, that it's got venture capital funding, you don't have to worry about max supply. There's so many things to look at. But if you've done all of that, there's no problem buying these down spikes because you're going to be in it for the long term. It really depends on your investing philosophy. A very important rule is 307. Excitement is a delayed fill. I'd like to explain a little bit more about delayed fills. Price is always moving in a wave. Tales from the Man Cave put this really cool animation together. Now, what does it mean? We can see price moving in a wave up, but price is always moving in a wave going up and down, up and down, up and down. What we do as a community is that we seek to layer, buy in layers. The lower the better. So what's happening here? Pac-Man comes up and gobbles that up. That's the falling knife. There's a falling knife. Poing. Yes, thank you. I'll have that one. This is lowering the average buy price. It's a very phenomenally profitable concept when you understand this. the whole investing and trading journey completely turns around. A lot of times people are never told about this kind of volatility. People recommend, I'll just buy on the first of the month every month to dollar cost average in. That's crazy. You really want to buy on the reddest possible day that you can find, and that's the last day most people would ever buy. Just always think about placing your buy orders in at lower levels, as price is always moving in a wave. Rule 4, we don't have to worry about missing out on things. You don't miss out, but it can take a while to fill that particular order. That's why we say excitement is a delayed fill. The delay is the price is moving up. You place a buy order down here or up here, and of course you need to wait a while for it to be filled, but it's so exciting when it... I would like to say thank you to Vicente and Richard for their very kind donations of buying me a coffee on buymeacoffee.com/cryptotradingks. I love what you wrote, Richard. Can you have made me a pattern recognition addict? Everywhere I look, I see patterns and getting strange looks as I draw support and resistance line in my mind's eye. I think that's so funny, Richard. Thank you so much for sharing. And thank you to Vicente, very nice. And of course, I'd like to thank all the other very generous people who have bought me a coffee. It's really nice. Thank you so much. I'd just like to say thank you to all the other very generous community members who have bought me a coffee on buymeacoffee.com/cryptotradingks. Every month I create just a special video for the coffee club members as my way of saying thank you. We will be doing another one of those videos for next month. This is my way of showing my appreciation for your generosity. I'd like to give you another gem here. I've been in the markets over 3 decades, and what I notice is what I call a changing of the guards. You can see these very red areas. These, for example, Luna was doing quite well, and VET was doing reasonably well in the past sessions. When we have a changing of the guards, and of course Solana was doing extremely well, we see a changing of the guards. It means basically markets are moving in and out of different phases. When you get a changing of the guards, keep a note of the green ones. For example, sometimes the guard does not change. Atom was doing quite well, Near was doing well, Cello was doing well in the past. Just keep your eye on these things. FTM is just coming up. OMG is just coming up. Started their run. Just keep looking for the patterns in all of this. This is another form of pattern recognition. Sorry, Richard, to do it to you again. You're going to see different patterns coming out. But keep your eye on what goes really green and then what goes red, and you will gain an insight into the market that is incredible. That's why I do the intro and the outro, because I want you to see across the market. Let's just have a look at the Ethereum tokens, and that's why I drill in here as well. I want to give you a record every single day of the week. What is this map doing? What has the price been doing? So you can get just better and better and better. Also, I would recommend not going too small. The small ones can be incredibly risky. You want something that is fairly large, because it means it's large because it's attracted investor interest. That's another really important gem. If it's too small, it may have volume integrity issues. The Coffee Club understands all about volume integrity. I haven't yet talked about that on the main channel. I will definitely do so later. Also, the thing to keep in mind is the stable coins. What are they doing? Now we see them turning green. This means that the money is flowing from the crypto market into the stable coins. That is all about redeployment and risk off. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you to our moderators for keeping our community safe from scammers. And just a note on that, anybody provides you a link to another site or gives you a phone number or says contact me on WhatsApp, pretending to be me, just contact me on Twitter. You can directly contact me anytime. I won't reach out with the phone number. So please keep yourself safe. If you would like daily updates on price movements in the crypto market, please subscribe to YouTube. I've left helpful links in the description of this video. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.